Give me an idea of what your psyche is like here going into this report, given the history and the most recent declines in shares.
Well, I mean, I think this is going to be this is the most anticipated earnings call in as long as I can remember. So just this time last year, they did 85 cents for this quarter. The street estimates are at 50 cents. So this is not good. They need to come out, or Elon needs to come out, I think, and take a page out of Mark Zuckerberg and stop talking about robotaxis like he was talking about the metaverse. Obviously, they're doing layoffs, which is smart. They got to get fit. But I think that they need to come out with a plan of, we need to get EV sales in line, full self-driving subscription. Let's hear about that. Let's hear about Optimus. Let's hear about all the other things they're doing. Let's not talk about robotaxis. I think if that is part of the narrative, that's part of the narrative today, the stock's going to go lower. I don't think it will be. I think Elon, he didn't go to India. I think he's going to take this seriously. And I think I wouldn't want to be short going into this call just because there's so much bad news already priced in, Scott.
Even if he takes it, in your words, seriously, how do you deal with or reconcile continued price cuts when the street thinks they're done, losing market share in China? You mentioned getting leaner. The whole maybe strategy shift, if you will, this robo-taxi idea, which you don't want to hear anything more about, but you might. And I'm curious what happens if you do. And then just a general EV slowdown. So maybe the goalposts have just moved in a way that you and other bullish shareholders didn't expect them to.
Sure. I mean, the EV slowdown in the U.S., as I've talked about a bunch, are not a big, it's important for like the story, but really it's China. And I still think that's the biggest risk in the name. I mean, as I've told you before, when I originally bought it, I sold calls against it, and which I like to do, which is a good thing to do, I think, in these types of names. But to me with China, I mean, the Model 3, first of all, Scott, is the #1 selling EV car in the world. And China's growth is still growing. If they can continue to be with BYD, China's a very big market, but they have to have a good plan there. And so to me, that's my concern on the name longer and midterm is what happens in China. I'm less concerned with the U.S. because it's really not that big of an EV market to begin with.
But isn't the writing kind of on the wall, so to speak, in China? If they're already losing market share, the price cuts don't seem to be making much of a dent. And do you have confidence that things are really going to improve there?
Well, I mean, I'm cautiously optimistic. You can lose market share as long as the buyer share is growing, right? So, I mean, you can be a smaller piece of a bigger pie. And so, I mean, China's all in on that. I also think it's only 6% of revenues, but year over year it grew at 50%. Energy storage longer term, it's not going to do anything for the stock today or tomorrow, but that continues to be a narrative underneath, kind of like Apple in the early days. So let me just be clear. I think it's dicey. I've said this before, murky over the next few quarters. Half my position got called away because I do sell calls. But I think that longer term, I'm still want to be in this name unless he goes all in on the robotaxi. If that's part of the narrative, I'm out. That's to me like flying cars. It's just not pragmatic. And so, as I said in the beginning, I want him to channel that Mark Zuckerberg. What he did, that really good pivot at Facebook or Meta, to say we're not going to spend so much. It's easier in an asset-light company, but I think it's going to be a must-listen-to call, that's for sure.
Wow, I mean, you sound, to borrow an expression from our friend Sebastian Page, like a reluctant bull, almost looking for reasons to get out rather than to stay in. But let me ask you this. Yeah. Given everything you said, and what stuck with me especially is the China story, where you talked about having a smaller piece of a bigger pie. If that, in fact, is the case, then why does Tesla deserve as much of a premium valuation that it was getting before if the story in one of the biggest growth markets on Earth isn't what it was?
Well, no, I mean, if you're a smaller piece of a bigger pie, you can have more of a story. I think that, I mean, I've looked at the Chinese market and looked what he's done there. And to me, like on the bearish side, they've literally copied him. Some of these cards have like the black credit card key exactly. So, I mean, that's a real pragmatic narrative that I have to think through. But I still think that's the growth engine for Tesla. The cars is in China. and we're just going to have to get through the next 2 quarters. And like, listen, I'm a pragmatic investor, and that's where if he were to go full robo-taxi, that's just not realistic, right? So that's not realistic. The market wouldn't like that. And so I would reevaluate there. But I just try to come in and be pragmatic, not dogmatic either way, and just take from the market what it gives me. But I am excited to listen to the call. And I think everybody else is as well. I think the expectations are incredibly low, Scott.
Yeah, we'll see what happens.